Singapore corporate earnings have reflected the impact of the circuit breaker measures. Many of 30 companies in the benchmark Straits Times Index were battered, but a handful got a lift. The circuit breaker aimed to stem the spread of COVID-19, shut retail outlets, hotels, and stopped construction activities. Experts say this could be the bottom, but warn that any recovery could be slow and uneven. Brandon Tenoto with more.
Travel restrictions dented transport and tourism-related firms. Weak ridership during the pandemic dragged ComfortDelGro into the red for the first half of this year. The taxi operator recorded a net loss of $6 million against last year's net profit of more than $146 million. Resorts operator Genting Singapore also suffered a second quarter net loss because of the restrictions and a shutdown of nearly 3 months. Until travel curbs are lifted, experts are ruling out any rebound in demand to pre-COVID levels. Property heavyweights weren't spared either. CapitaLand's net profit plummeted 89% for the first half of this year. The pandemic weakened its residential, retail and lodging businesses. And it's a similar story for city developments as well. Its first half profit sank 99.1%, dragged by its hotel operations. While the developers say their position remains resilient, one expert says the road ahead might be bumpy, citing a shift in consumer habits.
The property sector is fraught with danger. There's a great deal of shift from traditional office space to working from home. This creates a set of problems for the REITs and the property developers at a time of great stress in the industry. Shopping malls are under similar strain. People are moving to shopping from home. It's not clear when this trend is going to be reversed.
As for Singapore's 3 banks, all posted drops in second quarter earnings. Experts are also bearish on the banking sector's outlook, as lenders may have to grapple with higher non-performing loans as the pandemic hammers the economy.
There would be higher provisioning and people would be accommodating the prospect of lower operating earnings for the banks.
However, other sectors like tech are expected to remain buoyant as companies ramp up digitalization efforts and adapt business models amid the pandemic. Such as tech services provider Venture Corporation, it saw a 16.4% jump in second quarter net profit.
As we look into the second half, tech names, they are the ones still expected to excel. And this, also on the fact that we have a lot of this 5G revolution perhaps coming in that could see to a next wave of demand. Even if any surprises come through, I think that any dips is going to be rather shallow.
Year to date, the STI slipped more than 20%. In the same period, 25 out of the 30 companies which make up the index are down by between 2 and 42%. Market watchers don't expect the STI to peak at 2,600 points until the end of this year.